Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com, and it's Wednesday, May 21st. And I'm going to do a little departure here on the chart of the day, and you feel free to tweet this out to Tweeterville all you want. I got a real issue with these folks who say there's a world-renowned market timer who just the other day was on CNBC saying we were right in the middle of a correction. Okay, we're not right in the middle of a correction, not even close. There's no such thing as being in the middle of a correction when the S&P is within 1% of its all-time high, which it just hit last week. Okay, the Russell 2000, this is where it all begins and ends. Whoa, the Russell 2000 is down 9% from its highs here. Okay, fine, 9%. Well, frankly, if you really want to get anal retentive, and let's do that, a correction is only deemed to be a correction when it's down 10%. So even the Russell, that red-headed stepchild of indexes, is not even into, quote, correction territory, and it's kind of showing signs of support here at about 1100 or so, right? Kind of where you'd expect it to. So the Russell, that's not working for me. How about those dreaded mid-caps? Wow, the dreaded mid-caps are also off their highs. 3%. Okay, so let me get this straight. The S&P is basically at its all-time highs. The Russell is down 9%. That's as bad as it gets. The mid-caps are down 3%. Oh, but let's look at those nasty transports. They've got to be diverging. Well, actually, Horseshack, no. They hit an all-time high on Monday. Now they're off like less than 0.5% from that. And then how about the Nasdaq? Because we know how that's been sucking. Well, actually, that's down 5.5%. See, I'm like really good at this. I actually did it before I started the video, so I could say that. See in the upper left-hand corner where it says 5.49% there. Annualized, that's down 23%. What I'm saying is, if you're saying we're in the middle of a market correction, then dude, what you're really trying to do is get a reputation as a market timer. If this is your idea of a correction, you already have a reputation as a market timer. It's just as a bad one, okay? Guys, here's the deal. The Nasdaq, this is looking pretty stinking bullish to me. And I love hearing, and I mean, look, we've got more people on disability than ever before. And it's not because they're all disabled. It's because they're employment disabled. Not all of them, so please save the hate emails for somebody who cares. But what I'm saying is we got a lot of negative things going on out there that are every reason for the market to be going down. But it's not. It is moving sideways. You could say, oh, well, but this is a symmetrical triangle and this can lead to more downside. Yeah, it could. And when we get below 4,000, then I will say, you know what, guys? Now we're in the middle of a correction. I don't predict. I manage risk. And I think there's just as much risk, if not more risk, of missing out on the upside than there is getting caught on the downside. And by the way, do you know how you can mitigate this risk on the downside? Use stops. That's it. You don't have to be right. You just have to be disciplined. So look here. We've got the Nasdaq literally close to breaking out. Will it? I don't know. If I did, I wouldn't be telling you. I would be running like a multi-billion-dollar hedge fund in the Cayman Islands, probably from my own island. But I can tell you this. This is a bullish setup when you've got the S&P looking like this. I mean, I was on CNBC, not timing the market, mind you. I was actually a little hungover, to be honest with you. But I was on CNBC last Friday talking about how the best thing, for the healthiest thing for this market would be for it to grind sideways for a while and basically bore everybody to tears. Carl Quintanilla retweeted it. That's really what I'm talking about. We're drifting sideways here. This is not a correction. And I don't care. Look, and then I hear, oh, all these trend lines are broken. That's not a broken trend line for me. And by the way, I'm more worried about this trend line. That's what I'm worried about. But we still have time for it to confirm this. So am I getting a little hot under the collar? Yeah. You know why? Because my loyalty is to you, not to my own reputation. I want to keep you in as long as there's money to be made. And there's money to be made. This talk about being in the middle of a correction is just flipping stupid. Okay? There, I said it. Nobody else does. We are not in the middle of a correction. We're in sideways consolidation. You want to go for the large caps. I've been saying this before. Look at the XLI. I could go on and on and on. And members, I'll be doing that in the strategy session. You want to go large caps. What the heck is wrong with the railroads? The only thing that's wrong with the railroads is you don't own enough of them. They're all working. I could go on and on and on. Look at it. I haven't even looked at this chart, but I got a feeling I know what it's going to show. Oh, even Biotech. Look at this. Kind of looking like, and I haven't been a fan of Biotech basically ever since it broke down. I'm fickle that way. I don't like the teams that lose the Super Bowl either, unless they're the 49ers. So we've got a triangle here. Could we see more downside? Sure. Will we? You know what? Doubt it. This is trending sideways enough to where, you know what's going to happen? Biotechs, if they start breaking out to the upside, what do you think is going to happen? OMG. All of a sudden, all those folks who were cautious on the market are going to be Biotechians again. They're going to love Celldex and Celgene, Amgen, Gilead. They're going to be all over them again. I'm telling you, this is what you want to watch. If this starts breaking out, you need to be there. Should you be there now? No, because it could break down. This thing could fall down here, and that would be known as a bad thing. So I want you to stay in the game. Listen to this. Do you know what this is? This is the sound of me pounding the table saying you need to stay in the game. If you're losing money, then frankly, join the club. Honestly, my trading hasn't been that great this year. I've been involved in a bunch of other stuff. I wish I could just be sitting here watching the screen all day long, but I haven't been. There. Nobody else will tell you that either. But my analysis and my trading's been okay. It's just not been up to what my usual standards are. But my analysis has been pretty darn good, and I've been bullish pretty much all the way up. Do you know why? Because the market has not told me or you that it's time to be bearish. The only people that have told you that it's time to be bearish are people that you don't want to listen to anyway, because they're typically wrong. Like there are some folks out there that are totally fadeable. When they're bullish, you need to be bearish. When they're bearish, you need to buy, buy, buy. It happens all the time. What I'm saying is this. You look at these charts, and as long as you see these stocks and indexes up in the winner's circle, that's where you want to be. You don't want to see them down in the penalty box. And by the way, when you see them down in the penalty box, this is what you got to be looking for. Maybe it's time to buy. Maybe that downtrend is pretty much over. Well, we are not in that area. We're still here. So frankly, in a perfect world, you shouldn't be buying now. You should already be long. And if I want to be really more intellectually honest, what I'm really telling you is don't sell. I'm going to assume that you are not listening to the world-renowned prognosticators and that you are instead watching the charts. By the way, feel free to not listen to me either. I'm an expressed non-fortune teller. I'm the Wizard of Oz behind the green microphone here. I'm telling you, I don't know which way the market's going, but I will also tell you this, which will be a contradiction. I know the market is going higher. I know the market is going higher, and I will be right every single time. Every single time. I'll bat 1,000 when I tell you the market is going higher, except that one time when I'm wrong. Now, who would you rather listen to? And which chart would you rather watch and trade along with? The one that's right all the time, except the one time that it's wrong, and then thank the good Lord for stops? Or would you rather look at the chart and try to anticipate every single turn, or listen to that person or those people? And it's not just one. There's a whole bunch of them out there. Would you rather listen to that person who's trying to make their reputation in calling the top? Me, I'd just rather make money. And that's what I want you to do. And by the way, speaking of making money, what I'm going to do next week, I think it's Wednesday. It might be Thursday. My brother Gary has the final schedule, or he's got my schedule basically. But I'm going to be teaching a live webinar during market hours next week. We're going to see if we can't make some money here and make sense out of this during market hours. So, and it'll be for members, but you know, everybody will have access. I mean, you'll have the ability to be on there. We'll let you know when it is. So as long as you're a member of Stock Market Mentor, even on the free trial, then you can be at that webinar, and we'll see if we can't make some live trades. You'll get more details. Like I said, Wednesday, Thursday, I don't know. We'll let you know.